Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again at the gold market. Today we do not need to make lots of comments. Mostly everything goes with our plan, so this was really nice gift from the market yesterday with getting the grabber. Although we were talking about previously some different patterns to be formed, but I have no objections with this grabber that had been formed, which is actually makes overall trading process relatively simple because you clearly know what the pattern you have, where the validation point, as I said yesterday, and where to enter. So, and by far the overall approach and strategy is working nice. So as a target, we're still watching for taking out of this top in different ways. So it might be just the minor touching of the top, or it might be a real upside breakout. In any way, the grabber target will be completed. As we have estimated in today's video on euro currency, on the other markets, on the dollar index, on euro, the market starts forming something hinting on a possible dollar weakness. Probably it will be temporal effect, but it might be just enough to let gold to return back to the top, especially on the geopolitical background that we have, that really tough confrontation between the Iran and Israel is not coming by far, and actually this holds the overall market intention. Yesterday it was also a very important statement, as I suggest, from the Jerome Powell, when he said in one of his press conferences that actually all efforts that the Fed has done with the controlling and reducing inflation brings no effect, as he said. So, and that's actually, you could see reaction on the stock market yesterday, so it was also significant. But as Fed currently has very limited potential for rising the rate because of the condition in the economy, this indirectly hints that the real rates might be negative if inflation keep going higher with a stable rate from the Fed, or if even Fed will hike rate slightly. So this will have that negative impact on the real rates, which is potentially supportive for the gold. And that might be the explanation of the two moments. First of all, because gold hasn't shown any significant downside reaction on this. And second, why actually 10-year bonds yesterday has jumped even more. So in the beginning of the week we were talking about 4.6, now as you can see it's trading around 4.7 already. So it's really big changes just for one session. So and nevertheless, even on this background, we do not have any significant bearish action on the gold, which is probably could be treated positive. So on the lower time frame, on the follow time frame chart, we have today even more signs that pointing on a breaking of the shape of the hand and shoulders. Here's, by the way, we could get some grabbers. Let's check this out. Here's we have this one, and maybe here we could get another one, so we could check this on the futures of the gold market. So let's just take a look at the full time frame chart. What do we have here? Right, so the same as we have now on the retail broker chart. Here's we have the bullish grabber, which is also important, and it has been formed precisely at the 30% support that we have discussed yesterday. So the first entry opportunity, as we said yesterday, on the predefined level has worked nice. So, but currently this is very small grabber. As you can see, currently is already completed because market already taken out of this previous top. So its minimum target has been done. But anyway, this type of the performance with the other factors that we have on the back keep bullish context valid. So you could keep keeping possibilities for taking the long position here as well. As I said, shape of the hand shoulders now is almost can't be recognized, so market entity is breaking it apart, and this is also could be treated as a bullish sign. Divergence in place. On the hourly chart, that was our yesterday's 30% support of this upper direction. Here was, by the way, lately has been formed nicely looking bullish reversal session. Now take a look, market mostly is retesting the same area. Now we have a confluence 2370, 2376, and if you haven't taken position and you're still considering it, you could consider taking the position here. Stops probably might be placed somewhere below this area. If you, it's minimum acceptable area where you could place the stop, but potentially, and speaking in general, if you're trading the daily pattern, you have to place stops below the lows of this pattern, because this is invalidation point of this pattern, and it will remain valid until market stands above this area. So, but this is some compromise, because it seems relatively solid support area, previous lows. So at least something where you could place the stop initially, although it is not perfect position, I would say. But it could save lots of money if market indeed will keep going higher. So that's our view on the gold market. Let's keep watching, because here's very inspiring performance and the patterns that we have.